Welcome. In this video, ZBCN versus BONK, which is better, and can ZBCN increase 350%? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze ZBCN. The most notable structure on the chart is a clearly upward-sloping ascending trend line. This trend line shows that the price has consistently made higher lows over time, clearly indicating that the general direction of the market is upward. Trend lines are powerful tools frequently used by investors in technical analysis to help understand the direction of price movement. An ascending trend line in particular signals that buyers dominate the market and demand is greater than supply. Each time the price approaches such trend lines, buyers are expected to step in and push the price higher. Therefore, areas where the price is near this ascending trend, as observed now, can often mark the beginning of a new upward wave. In the past, the price has touched this trend line multiple times and each time has reacted with strong upward movements. Each of these touches proves that investors view these levels as buying opportunities and confirms how technically strong this trend line is. Currently, the price is once again approaching this ascending trend line, and it is highly likely that a bounce or upward reaction from this support may occur. In technical analysis, such levels are often referred to as dynamic support. These are not fixed horizontal levels, but instead take the form of an upward sloping line over time, where price tends to find support whenever it touches it. These types of dynamic supports are especially critical for the continuation of the trend. As long as the trend line is not broken, the bullish scenario remains valid and investors continue to align their positions accordingly. In the current situation, the price is once again approaching this ascending trend line, and the possibility of another upward movement is significantly increased. If the price bounces from this level and begins to move upward, it would signal not just a short-term reaction, but also the continuation of the existing trend. Moreover, such ascending trend structures often precede the next major move. That's because each time price bounces from this line, it tends to surpass the previous high. This suggests the potential for new highs and higher price levels. Therefore, it is strategically important for investors to monitor such technical levels closely. At present, the price is very close to this ascending trend line, and if strong buying activity emerges from here, it could trigger both a short-term and medium-term upward movement. This ascending trend line holds importance not only in a technical sense, but also psychologically. Many traders are watching this line and basing their trades on it. This increases liquidity at the moment the trend line is tested. When the price reaches this level, buyers often place a high volume of buy orders, leading to increased volume and the formation of strong bullish candles. At the same time, sellers who are short may be forced to close their positions if the trend line is not broken and price bounces upward. This creates additional buying pressure, helping to push the price even higher. While it cannot be known with certainty whether the price will bounce at this level, past reactions to similar touches suggest a high probability of a bounce. A proper analysis at this point could offer investors a very advantageous entry point. By placing a stop loss just below the trend line, investors could achieve a high reward opportunity with relatively low risk. Such setups typically offer a favorable risk-reward ratio and are carefully monitored by professional traders. Additionally, areas near ascending trend lines are often where large investors, whales, are also active. Bulk buying can occur at these levels as the expectation of price bouncing from the trend line supports and pushes the price upward. These structures in technical analysis not only reflect historical data, but also offer insight into the broader market sentiment. The current market mood is centered around this trend line, and therefore the price's reaction here carries great significance. In conclusion, there is a clearly established ascending trend line and the price is very close to it. An upward bounce from here could provide important signals not only in terms of technical analysis, but also regarding the psychological dynamics of the market. If the trend continues upward, new highs, target prices, and strong momentum moves may come into play. For this reason, this trend line should be seen as a key reference point by investors, ranging from short-term traders to medium-term strategists, and it should not be overlooked. Sometimes charts tell us more than numbers, and right now, this trend line stands as a powerful structure, whispering the direction of the market. But we can't rely solely on trends for our analysis. Let's now take a look at the other metrics. Stay tuned.
When we examine the current structure on the chart, we can see a significant bullish order block OB formation located just below the price action. These types of structures are especially considered critical areas where institutional or large investors have likely established positions, particularly in zones where strong upward price movements initially began. The main feature of these areas is that they mark the starting point of sharp bullish movements following a prior decline. In other words, high-volume buying took place here, the market reversed to the upside, and a footprint was left behind by institutions. This means that if the price returns to this level in the future, this zone could once again serve as a strong support. At the moment, the price is trading very close to this bullish order block. In technical analysis, there's a widely accepted notion. When the price returns to an area where it previously reacted strongly, it tends to respond similarly again. That's why the price reaching this OB level could be interpreted as a highly positive technical development in terms of initiating another bullish move. If this scenario plays out, where the price revisits the bullish order block and reacts strongly, it could lead to a significant upward acceleration. These zones are also seen as liquidity traps in the market. While many traders wait to enter positions around such levels, institutional buyers typically become active here. To explain this more technically, a bullish order block usually covers the price range between the last bearish candle and the start of the strong bullish candle that follows. This zone is typically marked as a horizontal box or region and is closely watched by traders. The way the price reacts at the OB level can be a strong signal indicating how aggressively buyers are stepping into the market. If these reactions are accompanied by volume, it could indicate not just a short-term bounce, but the beginning of a new trend. Additionally, the wicks and candle closes in these areas provide critical insight. For example, if the price wicks into the OB but closes above it, that suggests strengthening bullish momentum. Moreover, if the price drops into this area and begins to consolidate sideways before breaking out upwards, this is referred to as a base rally and often signals the start of a new bullish wave. From a trader psychology perspective, bullish OB zones are attractive areas for investors looking to buy the dip. The return of price to a previously explosive upside zone is often seen as a bargain opportunity. These zones also trigger a fear of missing out, pushing buyers to act more aggressively and increase their long positions. At this point, if the price bounces from the OB region and breaks upward, the initial targets are typically the previous high levels or newly formed liquidity zones. If the price establishes a base here and then climbs, it serves as a much stronger signal of a trend reversal. These structures are often supported by multiple candles, forming cup patterns or double bottom formations, with the breakout typically accompanied by high volume. In conclusion, the bullish order block located just below the price is not just a technical detail, it's a key zone where investors are eyeing opportunities and where institutional money has most likely taken positions. A bounce from this area would not only validate a potential buying opportunity, but also signal that the market is psychologically shifting towards bullishness. For traders, this is a highly strategic technical structure that deserves close attention.
When comparing ZBCN to BONK, a very interesting and high-potential scenario emerges from an investor's perspective. This comparison should be evaluated not only in terms of current market capitalization, but also in the context of project fundamentals, community influence, development pace, and market perception. If ZBCN reaches BONK's market cap, this would imply approximately a 350% price increase. This projection could excite investors and strongly signal the potential of the project. To begin with, BONK's current success can largely be attributed to the support of the Solana community. While BONK doesn't have a complex technical infrastructure, it has risen through strong community backing, meme culture, and momentum. As a result, it has been listed on multiple exchanges quickly, reached a wide user base, and gained significant traction on social media, ultimately pushing its market cap into the billions. ZBCN, on the other hand, is positioned differently. It is not a meme coin, rather it offers a more technological and project-driven framework. The ZBCN development team focuses on technical upgrades, product development, community growth, and potential partnerships to advance the project. Unlike BONK, ZBCN aims for a growth model based not just on speculation, but also on sustainability and solid foundations.
The idea that ZBCN could reach or even surpass BONK's market cap is not baseless. If ZBCN consistently executes its roadmap, expands its user base, and delivers innovative products in DeFi, NFTs, or other Web3 spaces, it has the potential to outperform hype-based projects like BONK. Particularly if the project showcases itself through long-term technological progress rather than short-term price moves, this success becomes achievable. Another important factor is overcoming the psychological barrier. While BONK may have a broader user base now, investor behavior evolves over time. Interest in new projects increases in proportion to the solutions they offer and the impact they create. If ZBCN markets its ongoing development strategically and takes steps to build investor confidence, it could quickly attract the attention of large capital investors. This could lead to significant jumps in both price and volume. Given ZBCN's market cap of around $503 million and the difference with BONK's valuation, reaching BONK's level would represent an estimated 350% increase. This might not be achievable in the short term, but with the right steps over the long term, it becomes a completely realistic target. A 350% increase not only multiplies the value of tokens bought at current prices, but also significantly shifts the project's position within the industry. Moreover, BONK's current position is not solely due to its speculative meme coin nature, but also the result of good timing and effective marketing strategies. If ZBCN takes similar steps in increasing visibility in media and social platforms, it could achieve and potentially surpass the same level of success. ZBCN's technical infrastructure, developer commitment, community management, roadmap execution, and vision are built on stronger foundations than projects like BONK, which means it has the potential to make more powerful moves during hype cycles. Unlike short-term pump-and-dump projects, ZBCN appears to be gradually putting together the components needed for long-term stability and growth. In conclusion, the idea of ZBCN replacing or even surpassing BONK is a realistic and logical expectation. Of course, this requires time, the right strategy, and community support. But once this goal is achieved, it would not only result in a 350% price increase, but also in the benefits of investing in a stronger and more sustainable project.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.